What's going on, cheers? Welcome back to another video. What a time to be alive. We are bringing you the little summary, quick recap of Jerome Powell. What did he have to say? How does this affect your pockets and your upcoming strategy for the markets for the remainder of 2021? Put it simply this way. Powell said the money printer is not broken. We are going to continue to keep on buying 80 billion of treasury securities a month and 40 billion of mortgage-backed securities, totaling 120 billion. The train has not stopped, and there is really no sign of it stopping. Interest rates, the federal funds rate was also kept unchanged, 0.25%. Like we talked about the debt we are carrying, the debt burden we have in this freaking country. It's not going to be the best situation if we go and raise to 1%. Is there going to be a move, 0.25% on interest rates? Nobody really knows. The key variable here, guys, is inflation. And the comments Powell made on inflation is, I quote, I'm going to read it off my iPad. He said, possibility inflation could be quite low going forward. Okay, low is a key word there. And then he says, Powell says inflation could turn out to be higher and more persistent than we expect. Guys, myself, nobody, Powell, the Fed, nobody knows how this is going to turn out. He said it's very, you can't guess what's going to happen in 2 years in 2023. There's a lot of variables that can happen. I kind of give him respect for him for admitting that. But if you go back a couple Fed meetings ago, man, inflation to them didn't even exist. It wasn't even on the radar. Now it's transitory. Now he's saying it could be persistent. It could be higher. That is the variable. Inflation. As for tapering and hikes, like they said, they're going to be letting us know when it's going to be happening. Powell says it will be appropriate to consider a plan for tapering at the coming meetings if progress continues. That plan, we don't know how high they're going to raise interest rates. We don't know how much they're going to be tapering. 15 billion a taper, a meeting. There's 8, that equals 120 billion. Makes sense to me over a year. Then we head into 2022, 2023. What I also do find kind of funny and kind of worrisome is the fact that he doesn't acknowledge the fact that this whole entire money that's been flucked into the system doesn't really affect inflation. They still have this idea that it's due to the supplies, the bottlenecks we have here in the economy. They don't acknowledge the fact that they just inject money into the economy like it's nothing, like we don't have to pay it back. Guys, he also mentioned the repo rates. They're gonna hit $1 trillion. We're literally playing $500 million every reverse repo. He also said those are under control, whatever that even means. That goes to show the fact that these banks are drowning in liquidity and they're parking it at the Fed. That's literally what a reverse repo is. And with these rates being so low, these repo rates almost going nearly negative, you're screwing all these other market funds, these money market funds. Today, Michael Burry also made his reappearance on Twitter after he was banned or he deleted his account. I mean, he is managing over 100 million in assets, so they were considering him a threat via on Twitter, spreading fudge, spreading fear that the market's going to crash. Whatever the case may be, he is back. He tweeted, people always ask me what is going on in the markets. It is simple. The greatest speculative bubble of all time in all things. By 2 orders of magnitude, hashtag Flying Pigs 360. He was right about the 2008 housing market crash. Is he going to be right again? Or is it just a one-hit wonder type of situation where he hit it once? He probably won't be able to be right this time. There's a possibility he's right. There's a possibility he's wrong. We don't know. Probably wondering, what does Flying Pigs even mean? There's a quote on Wall Street that goes by, bulls make money, bears make money, but pigs get slaughtered. That's why he tweeted hashtag Flying Pigs 360. Now, as for some of these notable stocks that we are watching, AMC, GameStop, we're watching the NASDAQ. NASDAQ, obviously, as soon as Powell started speaking, we had a massive dip. And then, once he started saying everything's going to be all right, we're not going to be tapering, we're not going to raise interest rates, it only makes sense for the market to continue to go up. It doesn't make sense for it to pull back now. And I have a feeling, and again, facts and numbers trump feelings, but I'm still going to put this out there that he was kind of catering to the market. He cared more about the market than the actual inflation, the actual problem there is right now. That's just one of my feelings. At the end of the day, they're not going to be tapering. They're not going to be raising interest rates. Those are the facts in the market like that. The VIX, as you can see here, also shot up. That fear gauge also shot up to 19. It did pull back at the end of the day once we started seeing a reversal in the index. The uptrend is there. GameStop is holding support right around 210. That was a pretty decent support level. For AMC, we're still holding $50. We had a 55 close. I know we kind of teetered right around the low 50s. But at the end of the day, man, you have to zoom out and you have to see the bigger picture. This stock was trading at $10 with less volume. The stock was dead at 10. There was no volume, no momentum. The stock is at $50. Guys, look at the bigger picture, man. Even if this stock does, by any chance, dip under 50, it cracks the support, there's going to be buyers waiting there. I promise you that. People are going to be buying the dip on AMC. It's going to be at these crazy levels. That's what Michael Burry was talking about. All these prices are crazy. Bitcoin, the meme stocks, I hate calling them that. Bonds, none of this really makes any sense fundamentally. But hey, man, it is what it is. That's the way it's pushing right now. At the end of the day, something is worth what somebody else is willing to pay for it. Two last important things before we end this video. JP Morgan is hoarding cash because there's a very good chance inflation is here to stay. This is for you guys who are on the sideline like myself with a ton of cash that are just waiting to get these discounts. These discounts might not come, honestly, next week, next month. Guys, when we talk about inflation and the overall index, this isn't the next day, next week. This can go on for 1 to 2 years. This can take some time. I mean, the next CPI prints are going to be very, very important on how the Fed decides to go about interest rates and tapering. Keep that in mind. But you're not alone, man. JP Morgan has a lot of cash on the side. They're waiting for these dips. It's only a matter of time. This is, I hate to call this a ticking time bomb, but it is what it is. One last important thing, producer price index went up 6.6% in May. Why is this important? First of all, it's the largest 12-month increase on record. This just simply means it costs more for producers to make things. Simple business. They're eating the cost right now. They're taking the hit. But what do companies do, man, when they have to raise, when it costs them more to make the product? They're gonna pass the cost to us, the consumers. Now things are gonna be more expensive for us. It's simple. When do they start raising prices? Again, it's just a matter of time. I don't think they're gonna start eating these prices for long. Inflation keeps on going higher. We're going to see higher and higher prices. Oil. We talked about oil. Oil was rallying. The cost of production goes up. Transportation goes up. Or these airlines, that's why airlines had a bad day today. That's pretty much it for this video, guys. If you guys enjoyed this, make sure you slap a like, subscribe if you are new, and I will see you guys tomorrow for another live stream. Peace out, team.